Hi, this is Mark with your analysis for the week commencing the 6th of March. I was talking in terms of last week for most of the pairs that they were best traded off 4-hour charts or smaller because of the ongoing Libyan crisis and all the big news last week. It was perhaps difficult from daily. However, this is the dollar Swissy, and what I was saying last Sunday was that we should be looking for a possible pullback to 93.20 area with a view to a short. And on Tuesday we got a perfect pullback and it did go 100 plus pips. And the reasoning for this is this was a major area of previous support that had held for a long time, and it was a triple bottom, so this was the crucial area. Once we break an area, it's quite reasonable to expect traders to come back and test the price before seeing if it falls away again. It did do it again Thursday, came up, and if you were trading Friday, I don't recommend NFP Friday, but again we had the big move down. Where has it stopped? It stopped around 92.30. So now we are in a range again, like lots of the pairs. And the ways to play this are look for possible shorts again back up here at 93.20. Counter trend traders will be looking for a possible long anywhere between 9200 and 9230 here. Did spike down to 9200. Or if you're going to just trade with the trend, you then need to wait for price to break and close below here with a view to a further move, exactly the same as we had here. Breakthrough, pull back, move away. Breakthrough, pull back, move away. This is the Euro USD on a weekly. Now I've changed the fib on here because it was too far away. What happened on Friday after the NFP news and after Mr. Trichet's speech during the week was that prices stopped to the pip on the 78.6 fib. It also, what I was saying to you last week was, think in terms of counter trend traders would be looking for possible shorts at 140. And if we went down to the 4-hour chart, it came late on Friday, did this, but this is the obvious logical area. It is a huge whole number. It is a psychological level, and it is an important level with it being the 78.6 fib. So there's lots going on. So for the week ahead, if you are of a mind only to go with the trend and the trend is clearly up, then you have two options again. You will look for a break and a close above 140, either on a daily or a 4-hour chart with a view to a further long, or you look for a pullback. And if you're looking for a pullback, then you would be looking primarily at 139, and then possibly here the bigger, stronger previous resistance support area was 38.60 area. So anywhere around here for a possible long. Those of you of a mind for a counter trend trade will be thinking of shorting at 140 again, and the advantage of that, I would only go half stake, but you only need to place your stop just above Friday's high, which is just over the 140 mark. So a short stop, potential big move down. This Bollinger Band is likely to close through this candle, and it would be expected we will get at least some pullback there at market open. However, the politicians have been talking up potential interest rate speeches about the euro all weekend in support of Trichet's earlier comments. So be very wary with the Euro USD market open. So Euro Yen on a monthly. And we looked, those of my mentor group looking at this for 6-8 months, we finally got a breakout a couple of months ago, and the significance of this was that this triangle move suggests that this move could go 6,000 pips. Watch this space. But we now had a clear 5-8 cross. We had MACD divergence giving us a clue that price was going to go up, and had you taken it simply from entry here, it would be a bumpy ride, but it went 400 odd pips, and it does look bullish as though we're going to go further. What happened Friday after NFP? Well, Thursday we finally broke through this range area of 114. Then in NFP we had the big spike. Price is currently outside the Bollinger Band, and as you know, it will normally bounce back in, return within. This is, however, a pin bar reversal candle. Once again, decide on what you think the direction is and then look for places to enter. The logical place to enter here would be 114 because previous resistance becomes support. You would then be thinking in terms of placing your stop below this lot because you're looking for a potential at least 200 pip gain up for a 70 odd pip risk down here. This is the pound dollar on the weekly. Now this is a basic chart with most of the EMAs removed. I showed you a few weeks ago how this is the first time that these EMAs 34 and 55 have crossed since 2008. When it happened last time, we had a 6,000 pip move. On the weekly, ideally what we want is price to come back down to here with a view then for a move up. But notice how price is respecting this trend line, and once again 16300 is the major area. At the moment we are now range bound in that we broke out of the earlier range, and now 160 has become support instead of resistance, and we're bouncing between 160 and 163. The Governor of the Bank of England has suggested that there is a potential for further crisis with the pound, although I think he's talking really about the global banking situation. We'd have to see whether his comments have any effect at market open. Once again, on the daily chart, you can see clearly how all last week 16300 was the important area. So counter trend traders, look for potential shorts back down. If it comes back down, then if you're of a mind for longing, 1606 was very important before, and then obviously 160 way down here. The other option is, because 163 is so important, look for a break and a close and a pullback with a view to a further long. Aussie dollar. Last week we were talking in terms of looking for pullbacks to 1001 down here, and this worked perfectly on a number of occasions. And during the week I'd said to my members here that if we could get this pullback, place your stop just below here, because we were looking for a target, upper target up here. So what you would be doing is placing your entry here, stop down here, 40 odd pip risk for a 100 pip potential gain. This is a pin bar candle here suggesting up. We're bouncing again, guys. We are in a clear uptrend. There is a lot of Aussie dollar news this week, so once again watch the news for clues, but the clues and the main areas to consider are the trend line and this area here for potential bounces back up. If we do get a major pullback, then this would be huge, because we have not only a previous spot and resistance, we also have the 55 EMA as well. But I'm only looking to long. So bottom line is, where are you looking to enter? Well, these are the two initial areas, and if later in the week it gets all the way back down here. Conversely, counter trend traders, once again, will be looking here at 1.01920 area for a potential short. And this is the big area again. The danger is, if this breaks and closes above here, if you start thinking in terms of a long, this is the recent high, and that would make me very wary. So I would much prefer a pullback, pardon me, with a view to a long. Watch gold again. I was showing you during the week, gold and Aussie dollar are correlated. Lost it a bit recently, but we're back again. It did break the previous high, and then it pulled back to the trend line. Now it's gone back up again. If gold races, then expect the Aussie dollar to follow. Dollar yen. Dollar yen last week, I was saying to you that I was looking for a pullback to 82.40. Well, we didn't get it till Thursday, and I then tell you not to trade Friday. Friday, huge spike because of the NFP news, and we're suddenly back down here again. The two areas for me are 82.40 still for a potential short, and then down here this trend line. Now, what I was saying to you during the week, the counter trenders amongst you would be looking for bounces, and you had 2 or 3 opportunities, because look how strong this trend line is. It goes back to December, and it's obviously being respected. So areas of interest here and here, and then as I said to you earlier, it's dependent on your point of view. If you think it's going to go up, breakout pullback. If you think it's going to go down, breakout pullback, or look for reverses. CAD, looking last week for a pullback to 98.20, never got it. It did continue downwards trend, and then it's just simply gone sideways. Major move down for the CAD. I would still be interested to short around 98, between 98 and 98.30. This is the Aussie dollar yen. This candle opened and closed within half a pip for the entire week. That is major indecision. For me, this is untradeable from a daily or weekly chart at the moment. The only way to play is to go down to smaller time frames again. On a smaller time frame, you can see 83.16 has been important, as has 83.50. So these are the areas to be looking. But this is messy and not my preferred trade of the week. This is the Euro GBP. Because of the comments of the Governor of the Bank of England at the weekend and last week's comments by Mr. Trichet, which have been supported by newspaper articles and leaks this weekend, there is a danger that the euro pound is going to go on a run. The crucial area here now is 78.6 FIP. It failed to break and close above it on Friday. 8600 therefore is the major area for me. Until it breaks 78.6, we're still in a downtrend, but everything on here screams up at the moment. If you are looking to long, you either wait for a breakout on a pullback, or you wait for a pullback all the way back down to 8,500, which would be a better area in that you have all these EMAs and previous support, etc., and fibs to give you extra strength for a potential bounce back up. That's it. Once again, I think we'd be better trading this from daily, 4-hour charts rather, because of the fact it has been very messy, and there is the ongoing problem still of Libya and potential disruption to oil, etc., etc. So watch this space. We trade it day by day. We trade it off 4-hour charts, and we look to make as much as we can as soon as we can. Have a great week.